So that is part one. So now we're going to move on to part two, and I'll screen share and I'll kind of walk you through each of these and show you exactly how to find that data and what it looks like and where to find it, right? So cool. Give me a second. All right, I'm going to use Charlotte as my example because that is a market that I'm specifically interested in and I'm really bullish on. So, kind of show you guys how that stacks up, okay? So I actually have a spreadsheet that I've already kind of set up here. I mean, I've got it for like every city, but we'll look at Charlotte specifically. I've kind of pre-canned some of this data just so that you don't have to just watch me type in numbers for 10 minutes. But so, like I said, Charlotte population. What's going on here? Boom. Look how easy that was, right? 2 seconds. So, I mean, look at that. That's what you want to see. Look at that. Just charging ahead, steady as a rock. I mean, nothing is getting in Charlotte's way right now. So that is just a huge tailwind. So this is one of the primary reasons I'm really bullish on Charlotte right now. They just got a lot of things going for it. So you just scroll your mouse over, align it with the year 2000. So we can see Charlotte in the year 2000, 577, 397. I'll go back to my spreadsheet, 577, 397 in the year 2000. Come back, the year 2018, 872, 498. Boom. 51%. So remember, we're looking for 22%. This is 51%. So that's excellent. That's super strong. I mean, it's almost there with the 10-year alone, but high growth market, right? So they're not all going to be that strong, but it's a good example. All right, moving on. So number two, we're looking for median household income. So I'm going to bring up city data. Hey, settle down. My dog is Maddie's doesn't have his DINNER right now. All right, so I had to pre-can, but you just type in city data Charlotte in Google and it'll be like the first thing that shows up. So again, we're looking for 31.5%. So you scroll down. Hey, settle down. And you can see here, it's got all the stuff we're looking for kind of right at the top here. So median household income in the year 2017 and in the year 2000. So you bring this 46,975 over. Boom. And then, hey, settle down. 61,350. Let's see if I can just 61,350. Boom. All right, 31%. So we're looking for 31.5. It's slightly below that. I believe it is, maybe. Yeah, it's actually even more below. So that's okay. Sometimes they don't meet the metric exactly, but you want to look at the big picture, right? So I think this is a really good example of a time where, okay, it doesn't quite meet the 31.5% rule, but it's so close and you're looking at all the other metrics that are super positive. It's okay. It doesn't have to check every single box as long as the big picture is looking really strong, right? So, all right, next on the list, median home value. So you're going to come down here, estimated median house or condo value in 2017. We're looking at 215.5. versus 131.5 in 2000. So perfect. 64%. So home value, we're looking for 42.5%. I mean, this blew right by at 64%. So like I said, that's super bullish. You want to see that home growth, right? So that's indicative of that strong demand, and it's going to lead to rent growth eventually. So, all right, and then I have, some other data points here that you might want to take a look at. So we can kind of look at those real quick just to see where they are. So median rent, cost of living, unemployment. So median rent's going to be right here, 1,088. It's going to have your cost of living right below that, and it's going to have your poverty rate as well. Poverty rate's worth mentioning. So, ideally not above 15. Sometimes you'll see cities going up towards 20. I think if you're above 20, that's probably not where you want to be. But this is also something that's changing neighborhood by neighborhood, right? So same thing with your gross rent. It's nice to see that number, but when you actually go in and you do your rent comps, you're not going to go by this. You're going to do actual rent comps in the neighborhood and your asset class, right? So, and kind of same thing with poverty and household income. So we're looking at the growth rate for household income, but when you go into your actual city, you're going to look at, your actual, what it is for that area. And then you're going to want to make sure it's above, 35 to 37, I would say, is your low end. And that kind of depends on the cost of living in that market as well. But yeah, so that's important. All right, crime. Okay, so this is another reason I want to show Charlotte. Charlotte's unique in that it doesn't show crime on city data for some reason. I don't know why. So you'd have to get that via other means. Albuquerque city data. So let's take a look at Albuquerque, because Albuquerque is a good example when it comes to crime. So Albuquerque is a market that I kind of had my eye on. It's a low cost of entry market, which I think is indicative of potential to grow. And it's right in the Sun Belt. So the Sun Belt has been seeing kind of massive growth across the board. So Albuquerque's, it's right there, right? So it's Texas, Arizona, Tucson, it's kind of similar size, but it hasn't exploded like some of these other low cost of living markets. And I think that's in large part due to the crime there. It's kind of known for having some crime. And if you remember back to when I talked about education, I think Albuquerque has like one of the lowest high school graduation rates of any city. So you can kind of see, so here's that crime table that I was mentioning. And yeah, it's got all the specific ones, but you can just go down to this crime index, and that's where you're going to focus on. So you can see they had a little bit of a run where they were declining, and something happened around 2011 where it started going up. So maybe maybe they were doing okay leading into the last recession, and then they were hit bad by that and are having trouble recovering, or maybe their policing efforts are not working great. So, but you can see this steady rise up to the 700s. So there was a dip. So this is through 2018. So from 2017 to 2018, there's a dip. So that's good. But personally, I want to see a couple more years of drops until I know for sure, because that could be an outlier, right? Next year it could be back on the rise. So yeah, they just have a problem there with crime, and they're kind of known for it. So I think that's holding them back as a city right now. All right, let's talk about job growth. So I talked a little bit about this website, departmentofnumbers.com/employment/metros. So this is a government website that they publish, and it's updated by month. So it's always going to lag, but this is current through September 2020. What you're going to want to look at is this you click on this and it's going to resort based on the 1 year percent change. There we go. Okay, so it's sorting worst to best. So these are the markets where you can probably say, okay, for sure, I don't want to be in some of these worst markets, right? But again, I would preface that with, because of COVID, we're seeing such volatility. Some of these numbers are going to be thrown off, right? So some of this isn't going to be really what you want to go by. So that's why I brought up that you're going to want to look at the past year and kind of see what the trend is, right? Because some of these markets you'll see they have negative job growth, but they're still great markets. So Lincoln, Nebraska is really great. Chattanooga was popular. Austin, Salt Lake City. Yeah, they're showing 3% job loss, but they're not really. It's not really the trend, I guess. It's sort of an illusion due to COVID. So what you want to do is go to web.archive.org. This is called the Wayback Machine. And what the Wayback Machine does is it takes snapshots. So the limitation of the Department of Numbers website is that you can't kind of go back in time. It's just that snapshot. This allows us to look at the past. Here, let me so I'm going to take this website, put it into the Wayback Machine, and now I can choose. It's going to have a calendar and it's going to show you the days that they took a snapshot, right? So then you can go in. So if you look at this April 13th snapshot, it's probably going to show you January data or February data. January 2020. So this you'll get a better indication. So you can sort the 1 year job percent change and get a better idea of what those markets are that are growing, greater than that 2% threshold, and the ones to avoid, right? So you're probably going to kind of builds on itself, like I said. So as you meet those other metrics and then you get to this, you can kind of make sure it's not a red flag, basically. So, and yeah, and you can see a lot of these markets super popular to invest in right now. Austin, Salt Lake, a lot of the Texas markets will show up. Phoenix, Boise has been super hot. So a lot of these markets above 2%, that's a really strong indicator, right? And then, like I said, you're going to want to go back maybe 6 months prior to that April one. So find the same thing back in, November or September of 2019. So you just come up here, you click 2019, and it's basically the same thing. So you can go to, okay, I want to see the mid-September. Boom. So what you can do is when you have kind of your short list of markets that you like, then you can come here and you compare, okay, what are the ones that are consistently showing up in this every, 3 to 6 months? What are the top performers, right? And that way you're just, like I said, you're getting that tailwind. So it's just helping you avoid making a mistake, basically. All right. So that's for the main 5. Pretty simple. You can see I went through that pretty quickly. Like I said, I would recommend getting a spreadsheet, and then you can just kind of type it in and see. I like doing conditional formatting because then you can have things green up or yellow up if they don't meet it, or go red if they're way off or something, So that's really helpful. And like I said, there's still other things you're going to want to look at, but this is the main stuff. Okay, so we talked a little bit about the post-COVID considerations. So namely looking at unemployment rate, employment diversification, and then the city fiscal health, right? So those 3 things. So I'm going to show you where to get those on Wallet Hub. So Wallet Hub, like I said, has been putting out some great data. and some great reports throughout this. So I found that's just a great place. That they've got it presented really slick and looks great. So, they kind of walk through their methodology and what this data will show you. But so I won't spend time kind of diving into each specific thing. But the bottom line is it ranks it based on unemployment in September. So you can see, I mean, right now September was 7.9% unemployment. So, I mean, 3%, 4%, you're gravy, right? So, and you'll see a trend. Rapid City, oh, nice. Omaha. So a lot of these cities are these smaller kind of flyover state cities that maybe aren't often at the top of these lists, but because of their kind of isolation, they're a little bit removed from the greater pandemic issues, especially some of these places like South Dakota. They weren't really shutting down their economy the way California or Boston was, right? So they fared a little better economically, so they didn't have the job loss that some of these other markets did, right? So you can find which markets you're looking for and where they stack up, or you can just say, hey, I'm looking at the, top 10, top 20, and I want to start looking at some of these markets because they're probably going to be the top performers coming out of this because they weren't hurt. So they kind of have a head start on the economic recovery, as you will. They don't have to do as much recovering. They're just kind of continuing to go forward, right? So I think that's really important to look for. All right, the next one, employment diversification. So they have cities with the most and least diversified economies. So if you just Google that, this will show up. But I can send you guys out the links to all these websites if you want that. I think that's probably helpful. So usually the replay goes out in about 2 days. I'd like it to go out in a day, but usually there's some post stuff that takes a bit longer than you think. So this is ranking cities according to their industry diversity and their occupational diversity, their worker class diversity. So it takes these three things, it kind of weights them, and then it ranks the city, right? So again, I don't want to get too deep into the weeds of their methodology, but I think it just gives you a quick snapshot of, hey, I'm looking at, Clarksville, Tennessee, Sacramento. Are these good markets post-pandemic? And if they're stacking up well on this list, then hey, they have that quality diversification among their jobs and employment. So they're not going to take as big a hit from this thing, right? Because, as some industries take a hit, others kind of grow and make up for that, right? So there's certainly been some industries that are booming out of this. Medical is going to do really well. Logistics, any sort of logistics is going to be really well because of the boost in online retail sales. So I'm thinking maybe Memphis could actually see a boost from this. Memphis has been a city that has struggled a lot with a lot of things, crime being one of them. But I think there's a big FedEx headquarters or something there. I think that's where all the air traffic comes in, is Memphis. So who knows, maybe they expand their operation there and they see a boost from it. So, but yeah, really, really good list. And, it's much longer than that. So that one's great. And then, okay, fiscal health. So again, best and worst run cities in America. So they have another really clean, nice looking list that you can go in and see what are the best cities in America. So again, their methodology, they have the quality of city services, and then they have the total budget per capita. So, and then they rank them accordingly. But that's probably something too, you can just Google and see what the local news is writing about. But, maybe there's a quick snapshot to say, okay, is my city, number, whatever it is, 150, maybe I don't want to be there, right? So, kind of surprised Chattanooga's there, but Yeah, and they've got some of these other things as well, which I think are nice little kind of pop outs of who's got the lowest amount of long term debt and the highest amount, high school graduation rates. So you can say, yep, Albuquerque. I was close, 146. So that's not good. Crime, crime's a big one. Unemployment. So yeah, Wallet Hub, can't speak highly enough about it. Really good data, really well presented. So, okay. So that is the long and short of it. I hope you learned something. And let me know if you guys have questions. I can answer them. If you have questions, you can throw it in the chat box, and we can go through those as well. Will recording be available? Of course. It'll be available in 1 to 2 days. So usually when I get the file downloaded from Zoom, I have to send it to a guy to get the audio cleaned up a little bit and synced up, because I don't know why it's usually not synced up, and can't put that on YouTube. So we'll get it cleaned up, and usually it's like a day or two. I'll email it to you. So I'll email it to you. You'll get the link. Do I look yellow? It got darker since I set up. No questions? How's Houston compared to other Texas cities? I don't have the one-for-one comparison, but what I can say is Houston is actually a lot more diversified than it used to be in terms of its reliance on the energy sector. So they've diversified away from that. Medical is really strong there. They've got the biggest medical campus in, for sure, Texas, maybe even the United States. I'd have to double check on that. But yeah, Houston has a lot of positives to it right now. And the thing so Dallas is a really good example where it meets all these metrics, and it probably is going to outperform just about every city on these metrics. But I don't like Texas or Dallas. Why? Because everybody knows that. So everyone and their mother is in there jacking up the prices, and it's just super high competition, right? So I think the profit's been realized in Dallas for the most part, unless you're willing to hold for 15 years or something. I think it's just really hard to get the numbers to pencil out. You could there's still good deals. People get good deals, but it's just higher competition, I think. So I'd rather go after that low-hanging fruit. But I think Houston's really strong. What area, in my opinion, is the best place to invest? So Houston is really good. So like if you're late joining, my partners and I got a letter of intent accepted on a 232 unit in Houston. So we're really excited about that. It's Class B opportunity, solid value add. So if anybody's interested in hearing more about that, please reach out. I'd love to talk to you about that. But I like Charlotte as well. So all the Carolinas are really strong performers. So you got Raleigh-Durham is there with a big biotech hub. Greenville, just to the southwest of Charlotte, also really strong. So basically that whole Sun Belt I like for the most part, because that's where a lot of growth is. I don't look at the northern markets. I don't look at New England or Minnesota, basically anywhere with snow. I think it's just an added thing you got to deal with. But also the growth is really happening in that Sun Belt. So I think that's where you get that tailwind, right? So that's what you want. Make it easy on yourself. Rising tide lifts all ships. Is there a way to track new residency moving to a metro? So do you mean the yearly growth? For sure. Yeah. For sure. That's out there. You could just Google population growth, Sacramento, whatever, and it'll tell you, hey, $12,000, 12,000 people a year, 15,000, whatever it is. Yeah, that's all readily available for sure. That's easy. Just Google that. Google itself might even just tell you that. So, uh, but like I said, you can just use that 2000 or 2018, and it's not going to change much. You're not going to see some drastic shift for the most part. All right. So Nashville isn't good anymore. I didn't say that. Um, Nashville still has a lot of positives. But they up their property taxes 34%. So I'm saying it's something you want to look out for is that health of the city, because if you had bought 6 months prior to them doing that and you didn't run your numbers for that, I mean, that's a big jump, right? Or if you're under contract or something when that announcement's made, I mean, you better hope your seller is willing to retrade that a little bit, because a 34% bump in your taxes is rough, right? So, and again, I don't know how they do their assessments. Maybe it's just on sale. Maybe it's every 5 years. So I think some markets do it that way. So it really just depends on what your market is. But you want to look at the big picture for sure. Yeah, it is outrageous. It's crazy. How do I anticipate rises in property taxes in certain cities? May have tuned out during that part. Yeah, it was just like I was alluding to the health of the city's fiscal situation, their budget. Are they facing bankruptcy, or are they, solvent? So, if city needs money, how are they going to get it? They're going to raise those property taxes most likely, unless they're willing to go some sort of austerity route. So, all right. Sounds like that's it. Any last minute questions? All right, guys. Thanks for joining. I appreciate it. Hope you learned something. Catch you next time. Cheers.